July ended up being a pretty chill month for the portfolio. We performed right in line with the S&P 500 and even made up a little ground on the total world index. Our dividend scorecard is looking solid again after last month's weird payout timing. And for today's random topic, we're going to talk about how to handle all of life's haters. And trust me, there's plenty of them. We'll get into all that along with the portfolios, value by holding, all new transactions, the dividends received, and a detailed performance breakdown against VU and VT. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please nudge that like button, subscribe if you haven't already, and drop me a comment below with anything that comes to mind. Quick little shout out to Seeking Alpha and Snowball Analytics, my two favorite investing tools. You'll see plenty of them in this video. So if you like what you see and you want to try a free trial, check out the pinned comment below. And if you end up going above and beyond the free trial, you support the channel, and more importantly, you save yourself some money. Wait for a good sale. You know what time it is. Let's grow. Stay the course. I think today's random rant is an important one for both investing and life. There's a saying that comparison is the thief of joy. I get it, I understand the intent behind it, but I think a lot of that comes down to mindset. Truth is, people love to pull others around them down, and here's the thing, we're never going to change that. What we can do is build the resilience to push through it. Stay the course with your well thought out systems in investing and in life when the haters are trying to poke holes in it. Over time, with consistency, you will rise to the top organically. And as a side note, my mom used to always tell me the truth always comes out when I would complain about someone cheating or taking shortcuts. And she was right. Instead of being jealous of other high performers around you, be inspired by them and learn from them. Take pieces of their game to create your own battle plan. Stay consistent and continue evolving. One day, you'll be the person others are looking up to. And I know this topic feels very random, but I get some comments that are just people throwing shade just for the sake of it. And I'm used to it at this point. But I know when I was newer in my investing journey and just evolving and learning in life, reading more, it can be discouraging early on. So if you're having people poke holes in what you're doing and pick on you and make fun of you, I just want to give you the encouragement to stay the course because you will keep rising to the top, I promise. And speaking of staying the course, let's move on to the next section already. Portfolio overview. We'll pull up the portfolio tracking spreadsheet that brings everything together in one place. This spreadsheet's available for anyone to use. Make your own copy with a save as and do whatever you want with it. Link in the description below. We'll start out here on E-Trade, which is our main platform with most of our assets. Now within this all brokerage and bank accounts here is the high yield savings account we have, all of my formal 401ks that are now my traditional rollover IRA, my and my wife's Roth IRA, and our taxable account. Everything in E-Trade's clumped into this, and I just have all accounts. Our largest position out in E-Trade is still SCHD, and we're carrying those same 15,000 shares at a cost of $24.67. Nothing too crazy. This has been moved around a lot over the years. And a total value of just under $400,000. And our VGT, we still have our juicy 500 shares at the lovely average cost of $246.50. I have not moved these around as much over the years, rebalancing and other things. And they're worth just under $345,000. Now our JEPQ, we're slowly adding to this. We reinvest a little bit of the dividends each month, but not a ton. And by the way, this pays tomorrow. It is Monday. Market is open right now, so I'm recording on August 4th. So you're going to see some numbers move around. You can see so far it's been a great day. We're up almost 13K. So this is going to look prettier than our spreadsheet, which is as of Friday. We have 1,890 shares of JEPQ, and the average cost is pretty high just due to our timing of getting in somewhat recently in December of $57.80. Now it shows we're upside down, but really we're in the double-digit green. This does not include dividends, which with something that yields 12% is a pretty big deal, and it's worth $103,165. And now our money market currently sits at $82,621. And remember, we also have this high yield savings account down here at $56.94. So really you add these together, and I do so in Seeking Alpha, which we'll get to. IBIT, we're still chilling with our 1,000 shares. That one hasn't moved around for us. $65,600. And then this SWPPX, it's an S&P 500 index fund from Schwab, is my nephew's, and this will be out of here come November. And then SCHG is my brand new position. You can see it's still just a little baby of 50 shares. I'll probably buy some more, spoiler alert, here in early August when I get my JEPQ dividends tomorrow. But it's currently worth about $1,500. So in our E trade, even without the nephew this time, so we can boot him, we don't need him anymore. We've eclipsed the $1 million mark. Our total assets is $1,005,498, up a juicy $274,000, or about 38%. And again, I should point out, this does not include dividends. This is just the unrealized gain from the price appreciation. Okay, now we're bouncing out to Seeking Alpha, where we roll everything up, E-Trade, M1 Finance, and my wife's work stuff. And you can see here as of right now, and again, this will be, wow, this has gone up even more from when I just looked. The market is open once again, so this will bounce around a little here, but the shares will be the same. You can see we're sniffing 1.6 million again. Our spreadsheet's gonna be so sad when we bounce over. It's gonna be about this much less than whatever we talk about right now. And we'll drop down the ETFs here. Now, most of this is the E-Trade stuff, which I'll very quickly reiterate. SCHD, same 15,000 shares. VGT, 500 shares. There's that JEPQ, 1890 shares. IBIT still has that clean 1000 for my OCD brain. Now VUG, this is my wife's HSA, and we contribute to this on a monthly basis, and a company match helps as well. And you can see that we currently have 96 shares of VUG valued at $43,645. And then the SCHG is the same as we just saw in E-Trade. So we'll close up this ETFs, and this is just how I organize them. Now VU, this is my wife's 401k. We put 100% into VU, the S&P 500. It's good right now for 840 shares at a total value of nearly $487,000. So this is a big one, and we continue to max out this 401k. And the company match is about 10%. It's ridiculous. And then the HODL factory here, and I won't expand this. This is my 20 individual stocks that I run for fun. I make quarterly videos that detail this at a painful level, so I'll spare you right now. It's worth a total of $23,757. And then our cash and cash equivalents, we have the E-Trade portion of $88,018. That's what we already saw, the high yield savings plus the money market out in E-Trade. And then we also have other high yield savings and cash holdings that we have elsewhere that we won't look at individually, but that's $40,210. And I mark them both as money markets here just because I update them manually. So they're always balanced every Friday. And that gives us a grand total now, it might have bounced around a little, of 1.595 million up here. And again, just today it's up 1.32%. I will take it. Okay, now we're rolling out to the spreadsheet, which is out there for free. And I know many of you follow along and do your Friday updates as well. And I think that's so cool when you tell me about that, by the way. But as you can see here, we are about 20,000 lower than we just saw. This is as of the end of Friday, which is my official updates. This is the number you'll probably see in the title here. And these are just carrying forward all the same numbers as of Friday from Seeking Alpha. So everything was synced up then. And what we do is we manually punch these bad boys in, gives us our total, and then we come over to allocations to see how we're looking here. And this helps guide purchasing decisions. I roll these individual holdings up into categories here. And you can see Cornerstone, it's VU. Spoiler alert, they're the highest position at 30.5%. And this thing's going to run away because I don't have my big income anymore that I had since leaving my job in mid-2023. And most of our investing goes right into the wife's 401k, and that's maxing it plus a company match. But hey, if anything's gonna run away, I want it to be VU, because if Buffett says this is all I need, then I think that's a good core holding to start with. Now, my decisions come on value and growth. Value for me is SCHD. Growth is a bit of a combination here. I have my VUG, which is our best available option in the HSA, SCHG, which is my multi-sector growth of choice, and we just started this position, as you can see, and VGT. So these all roll into quote-unquote growth, and we're still a little light on growth. Our next dollars will go into SCHG, and then once these flip-flop, and growth passes value, the new dollars will go into SCHD. You basically buy the comparative dip by default when you stick to your target allocations. And my little simple system is just to keep these the same. And then cash is sitting at 8.1%. I've historically had this around 10, but with the Roth conversions and the cash flow, which is JEPQ, I'm tinkering with the idea of letting this get a little lower. So more to come on that. I'm still pondering. I don't like to make knee-jerk reactions. But as you can see, cash flow, and that's JEPQ, and this is all in a Roth for now. And so every month we get a big cash flow from JEPQ, which is 6.5% of our portfolio. And then we reinvest those dividends into SCHG or SCHD. And it was historically, by the way, VGT was my growth of choice, and it still is, frankly. That's why I have 500 shares. But I don't want to add to this position. It's 100% tech, and I love it. I'm a tech bull, but I like to just balance out the growth with SCHG. So over the next many, many years, this will slowly become a bigger portion of the growth. Without selling VGT, we're just putting new dollars into this one. And then we have our Bitcoin, which is all IBIT, and it's just 4.1%. I want to keep it between 3 and 5%. I'm just chilling with those 1,000 shares right now and staying the course. And then the HODL stocks here, the HODL factory, are my individual stocks that I run with my best friend Hutch. They're at 23,000. This is where all my YouTube money goes. So thank you to everyone out there watching. Because really, that's what entirely funds this. We keep, just for fun, I have a business checking that is 100% separate from our normal stuff. So anything in the HODL or M1 Finance high yield savings, which is about $3,000 right now, comes directly from YouTube. And you can see the grand total here is that same 1.575 million that we saw in the snapshots. Oh, and speaking of snapshots, if you watched every month, you know that it took a long time for us to hit an all-time high. Now keep in mind, a big car purchase, a family car, and a Roth conversion was in here for about 60K of cash that went poof. So we had to overcome this all-time high back in December and 60K of extra spending, but we finally did so as of July 18th. And then I thought, you know, this thing only goes up. I love it. Just keep investing and experience the infinite money glitch until last week happened and we lost 38,000 without any extra spending. So I don't know. Ride that roller coaster, baby. But the reason you keep riding that bad boy is because when you look at the portfolio value by month, you see over the years, this thing just keeps on ticking up. It goes up and way down. It's like, uh-oh, we're screwed. And then it goes like this. So I'm sure this bar will continue to go up and down and up and down. But when we zoom out, we're going up. We're going to snip that 3 million, I'm telling you. And then here's our portfolio projections tab. Takes our current investment value and our monthly contribution, which again is primarily the 401k plus the huge company match and the HSA. And here's that new retirement calculator that I made. If you were here last month, you saw this. It's pretty cool. You put in your goal, so 2.5 million, for example, and we have tracked this thing for 3.6 years. This is actual numbers, like from the snapshots tab. And our lifetime CAGR overall is 16.36%. That's what's actually happened. Again, it's very high. It could go down as the market balances out. It's been a bull market. But if what's actually happened in the last 3.6 years continues and you extrapolate out the numbers, we would hit 2.5 million in 3.1 years, or 2028. And I think the wife wants a more secure 3 million, and the wife is always right. So let's just change that now. If we continue our current pace, it would be 4.3 years, retiring at the end of 2029. So I love this new thing. It's going to be all over the map, you know, as the data changes, but it's kind of cool because so many things we do is estimates. You know, we're assuming an 8% nominal return instead of the market, it's average of 10%. This does not include inflation, but all these, you know how it goes. We're not going to have exactly 14.238 million in 24 years. It's just not how it works. So I love having something like this that assesses what's really happened. This includes our spending, so you get credit for spending fewer dollars on cars and things like that. And, you know, this is the whole story right here. And so it's fun to see because you get credit for all the little decisions you make in life and your investments. Time to find out what I was smashing that buy button on. Portfolio contributions. Not gonna lie here, this section has gotten a little less exciting since I left my high-paying job in 2023 to focus on the family side of things. But there's still a little juice here each month. Let me show you what I mean. We're out here on the transaction spreadsheet, and we're going to notice, if you've been around the channel, the usual suspects here, but we'll break down where the money comes from. So for the HODL factory, that's my 20 individual stocks that I just call the HODL factory. There were 4 contributions. It's a weekly contribution, $100 each, so 400 total in July. So those YouTube dollars getting thrown in the market here. And then JEPQ paid its monthly dividend, of course, and I reinvested a little more than I had been as of late. I had only been doing 5 shares, but I decided to buy 10 shares of JEPQ for about half of its dividend. And then I bought 20 shares of SCHG because growth was lagging value per my target allocations. So I bought this SCHG at an average cost of $29.19 here. So YouTube money here, and then reinvested dividends here. And then VIGIX, which I label as VUG, the ETF version, in Seeking Alpha, same thing. We picked up 1.6 shares, which cost a total of $363. This will be a little more random because my wife and I pay our medical bills with our HSA, and I am well aware of the pros and cons of that. I think the cons outweigh the pros with excess dollars at the end of the day when we play out all the scenarios. It becomes a traditional IRA with far worse age limits before the restrictions are lifted of the healthcare costs, and terrible by comparison for your inheritors. Just looking ahead, and we personally choose not to min-max our HSA. And then VU is in the 401k, which we max this bad boy as much as we can. And this is actually 3 contributions. So it's every other week. She gets paid 26 times a year. This happens to be one of our juicy times 3 months. We get 2 of those a year. So it's a big month here. Average cost, wow, VU's getting up there at $577. And now it's a grand total of $6,100 with new contributions of about $4,600. The rest is reinvested dividends and YouTube money. Time for my, and probably your, favorite section. Dividends received. July finally shed some light on the unsolved mystery that we saw last month with our dividend payments. Now we can see how the year-to-date dividends are really shaping up. Okay, don't hit the panic button here. We're out on the dividend spreadsheet tab, and you can see we have everything selected. So we're showing all data here from the last 2 years and change. And July is at 2,800 compared to last year's 6,400. Did I give up and sell everything? I did not. Let's expand this bad boy here. You can see that our JEPQ paid $929 this year, which was low. It was a very low month, I will say, compared to the last few months, versus $687 last year. Big jump there. The M1 mix, very interesting. $1369, nice, but not nice compared to $1977. We have reduced our holdings to 20 stocks, and very few of them pay in July, but still interesting. That's our first drop on the HODL here. But there it is, SCHD and VGT both paid last July. This year they paid those dividends. You can see the delta here in June. So we'll get to comparing the overall picture here in a minute. And then VMFXX, the money market, I have it split between this and high yield savings accounts this year. Still more last year, but makes up that a bit. And then the SP 500 paid us a nice juicy $200 more. So now to iron this out, let's show June and July only to see the real picture here. So we used our slicers here. I love that about Excel. And you can see that this year, with all the dividends paid, getting rid of that timing difference, we had 87.55 in 2025. And a nice healthy 78.10 last year. So we have increased our dividends by nearly $1,000 over these 2 months. And now we can actually add the rest of the year because we're all caught up. Everything is paid the same amount of times. So for the year, we're at 21,772 versus 18,168. Not looking too bad. That's a pretty good year over year increase there. But then real quick, we'll unfilter. You can see that through 7 quarters, we're at that 21.7. We might not quite hit 40K this year. I said earlier in the year we may hit 40K, but it might be 38, 39, maybe 40 if we're lucky. But I do think we'll comfortably beat last year. And you can see a lot of these are backloaded in December. So hopefully we have a nice little pop here. Time to find out if this thing even works. Portfolio performance. July was a flat month, and our portfolio was no different. Let's see how we stacked up against the market's best indices. We're out in Snowball Analytics, and you can see that I currently have everything pulled up. I have my investments broken into cash, like my money market. I separate that out from the HODL factory. These are my individual stocks. And then my ETFs are in a bucket. I roll one up to stocks and ETFs only, so we can eliminate cash when we're comparing to VOO and VT to see how we do against like competition. And then one for everything. And that includes ETFs, stocks, and cash. So out here on everything, you can see we really popped compared to the spreadsheet I showed earlier. We ended the day at just under 1.6 million. We got up to 1.596 here. Total profits, $527,000. And our internal rate of return, pretty much your annualized return, is 16.11. Not bad. And that's including cash too, so that's pretty solid. And our passive income, we have a yield of 2.54% and a dividend growth rate of 7.2. So not bad. And you can see here it estimates us at 40,500 annually. So that's good. The reason I don't think we'll hit 40K this year is because, of course, we're adding to the portfolio. So the annualized amount is always going to push out a little, but we might get there. Okay, now I popped out to analytics and growth, and I'll tell you what I've done here is I've selected just our ETFs, which is most of our value. The HODL factory is about 23,000, and then cash is just cash. We don't want this in here, of course, because that's not apples to apples. But I make a quarterly video with the HODL factory. I'll get into that more in that one, but I also have a HODL factory stats spreadsheet out there, link in the description below, where every week you can see exactly what I hold and exactly how it's performed. But for now, we're going to focus on the ETFs, which is the bulk of our wealth. And you can see here that in July, I've filtered it out here on the portfolio value. This includes your contributions and just says if you put it into something else, what it would be worth instead with your exact contributions. We trailed VOO by 0.28%, so really close there, $4,100. And I pulled up VT, and that's the whole world market. It's basically VTI plus VXUS. It's just everything. So obviously it includes VOO as well, but it's just a big holding with 9 or 10,000. I can't remember exactly how many holdings, but we outperformed it by a nice 1.25% or almost 18K. So I like that. Pretty solid in July. And I figure I'll show year to date as well on these things. And you can see we're trailing VOO by 1.61%. That hurts a little, but we're right there, only 23,000 behind. And then VT has been on a tear this year. I'm not sure everyone's aware, but it's obviously, as you can see here, it's outperformed the market VOO by quite a bit, and it's crushed me by 4.72% in 2025. Okay, now this one down here is portfolio performance. This is your annualized return. Doesn't care about your contributions. This is just how the assets themselves performed against one another. And I love Snowball Analytics so much, you guys. You gotta try it. It's 100% free. Link in my pinned comment, like I said, but really, if you don't like it, then just cancel it. You pay nothing. I think you'll like it because all these metrics include dividends. Every single one we'll look at today. But as we look at July here, for portfolio performance, we were up 2.47%. And the market just got us at 2.59%. That's a close battle. And VT, and the orange is VOO, by the way. VT, the purple one, was up 1.1%. So we made up some nice ground on the world market. But as we just saw above, when we go to year to date, the world market, the purple bar down here, is kicking some butt. It's up 11.57% this year to our 6.45, and the market, or excuse me, I call it the market, VOO's 8.3. So the world market has really dominated. And this one's cool down here, and as always, we won't go over all of them. It's just the month-by-month returns. You can see in July, the month we're in now, or reviewing now, we were up that 2.47. We just saw that. 2.59 for the market, and 1.1 for VT. But yeah, a solid month for the Teepster. And now's the fun part where we look at the holdings performance and we find our culprits. And I don't know about you, but I'm seeing red right now. So you can see the market here at that, what we already saw, the 2.6% positive. SCHD, there in the middle, down 2%. And then we have VGT, our growth, at 5.2. We have JEPQ at 1.6, so trailed the market a little in July. And our other growth, you can barely see it because it's my brand new baby position, actually up 4.1%, so it did pretty solid, SCHG. And then VIGIX is another growth component at 4.2, is about the same as SCHG. Again, SCHD is my value, and then my growth is VGT plus VUG plus SCHG. And then my wildcard IBIT was the big boy this month. It won the show at positive 10%. And again, our cash flower trailed the market a little by 1% here, JEPQ. And when we zoom it out year to date, you can see the market's doing pretty well here at 8.3%. SCHD got off to a miserable start and it hasn't really recovered. It's still red on the year. Ouch. At just about 1% down. VGT's ahead of the market, and then VIGIX and SCHG are slightly trailing the market on the growth side, so that's interesting. Oh, and SCHG, this is just my performance on it, so that's not indicative of how it's done on the full year. It's a new position for me, whereas the other ones I've had all year. IBIT up 22% year to date, and then JEPQ is up 1.6. And historically in its first 3 years, JEPQ really mirrored VU. It was kind of crazy, like plus or minus 2% basically at all times. But as many know, a couple months back, JEPQ really fell face first compared to its peers, the other NASDAQ 100 covered call ETFs, and the market never looked back. It just kept zooming on ahead. So it's been a rough year for JEPQ if you're looking to keep up with the market with it. I like the cash flow, with the bonus being market type performance. And real quick with Snowball Analytics, I just wanted to show this off real quick. When you go to your portfolio holdings, that's where I'm at right now. I'm on my holdings right here. But the total profit, you can see that on JEPQ, I was down. We saw out in Seeking Alpha, I was down 6%, just strictly on price. I bought it in December. But you can see the overall return is plus 11%. So Snowball Analytics does properly include your dividends. I just wanted to point that out real quick. A lot of dividend investors love this platform because it gives you love here on a dividend specific column. Still have your cost basis and all the normal value stuff, but the total profit really is total profit, unlike the online brokers. I love that about this. And I think I'm going to cut that off here. There's so many more things to see. Let me know if you've seen the past videos, if there are additional things you'd like to see in Snowball, because normally I go over way more nerdy stuff. But I feel like the performance and a quick holding snapshot probably gets you where you need to be and saves you 48 minutes of this guy rambling. Let's close this bad boy out with a topic that I think is more important than the X's and O's. Perseverance. Look, you're going to make plenty of investing mistakes, and your harshest critics will relish in each and every one. That's just life. Simply block out the noise and learn from the experience. And as you learn and evolve, you'll find newer investors that are making the same mistakes that you once did. Instead of piling on them, help them in the moment. And guess what? You're likely going to learn something new from them. Positivity and perseverance is one heck of a 1-2 punch. You'll be successful over the long haul while also enjoying the journey along the way. And speaking of the people helping me enjoy this journey, a huge shout out to my 2 brand new channel members, Charlie and Chris. I really appreciate the support. And another big shout out to Bobby, Jay Gentry, and Sean for rejoining the membership. The 5 of you and all of you current members really mean a lot to me. I've said it multiple times, it's my favorite kind of support, organic and unforced. For anyone that joins that doesn't see their name in the next video, I do these shout outs maybe every other or every 3rd video now, so I promise I won't forget you. Check out this video right here to continue down your path towards financial freedom. Remember, money is overrated, freedom is not. Thanks for watching, and I will see you in the next one. Peace.